First of all, I'd like to thank you for being here this morning and showing an interest in what we consider to be a very important piece of legislation. This is important legislation to strengthen the internal controls and improve accountability in the way the state spends your hard-earned tax dollars. I want to thank Senator Spada and Representative Schindel for their leadership in introducing companion bills in both chambers. I also would like to thank the Ohio Society of CPAs and their assistance and input as we've worked through this bill. Where did this idea come from? Where did it all start? In 2005, news broke about improper investments in rare coins at the Bureau of Workers' Compensation. It turns out that in 1999 and in 2000, an internal auditor first raised concerns about the investment and voiced those concerns to the BWC management. News reports say the concerns raised by the internal auditors regarding the investments were dismissed by agency administrators. In fact, it was reported that a response to the internal auditors' concerns was a compromise. We can't afford compromise in how we safeguard taxpayer dollars in Ohio. For the past 2 years, management letter for the State of Ohio's single audit recommended establishing a state audit committee to enhance credibility of financial reporting and strengthen agency internal controls. Statement on Auditing Standards number 112, issued by the American Institute of Certified Public Accountants, December 15, 2006, says an effective internal control structure creates significant control deficiencies for very large or highly complex organizations. Let me repeat that. An ineffective internal audit structure creates significant control deficiencies for very large or highly complex organizations. I first began working on this legislation as a state representative in early 2006. The proposal addresses the need to overhaul the internal audit function of state agencies, a system that is severely flawed. This proposal is a common-sense approach that will assist in improving accountability and oversight across state government and help prevent another BWC-type scandal. What is the Office of Internal Auditing? The bill establishes an Office of Internal Auditing within the Office of Budget and Management. The office would be staffed with current state employees classified as internal auditors. Internal auditors would submit a plan for auditing all state agencies, including the Bureau of Workers' Compensation. The office would submit audit reports to interested parties in a defined time frame. Who will serve on this audit committee? The bill also establishes an audit committee to oversee and approve all the annual internal audits. It also will approve the internal audit plan. The committee consists of a 5-member board, the director of the Office of Budget and Management, a financial expert, an inactive or retired CPA, a government accounting expert, and a representative of the public. The committee would enforce internal auditing standards and make all auditing reports available to the public. How will the findings be reported? We intend that this legislation to include internal auditors be added to the list of individuals that a state employee can report fraud to and be protected from further retribution. This provision is consistent with the federal Sarbanes-Oxley Act that was passed in 2002, a measure to provide safeguards and protections for employees who report fraudulent activity within their agencies. The legislation defines the time frame for reporting all internal audits. Once an internal audit of a state agency is complete, the director of that agency has 30 days to respond to audit findings and in order to provide a corrective action plan. 30 days after that, the Office of Internal Auditing will release a final report to the State Audit Committee, the governor, and the director of the audited state agency. The State Audit Committee is required to make all preliminary and final reports available to the public. Suspected fraud discovered over the course of an internal audit is required to be reported immediately to the State Audit Committee, the director of the audited state agency, and to the auditor of state. Internal auditors are in the best position to detect fraud or corruption at its earliest stage. We need to empower these individuals to do their jobs. Requiring internal auditors to report their findings to an audit committee provides enhanced independence and transparency to the process.
Good morning. It is a great day, I think, for the people of Ohio with this new initiative that the Auditor Taylor and her staff are going to put forth and try to help us with state government. As someone who at once made their living by doing auditing, and I know this isn't one of those sexy type occupations that gets reported too often, but I do think it's a function that, especially in state government, we need to follow through on. And the reason I'm here is because obviously I'm the pretty face, and that's why I was chosen to work with Mary. We worked together the last couple years trying to put this into place. And now we do have this opportunity to roll it out, and I do believe we will come up with some good findings. I think we streamline the process. I think we offer the opportunity for better reporting and less political inner workings inside agencies and departments. So I look forward to seeing a successful outcome. I look forward to seeing us putting the end to some, or attempting to put the end of fraud and waste in government. And I applaud Mary and her staff in the auditor's office for going forward with this.
As a CPA, I understand the importance of internal controls and checks and balances. And as an office holder and an Ohio citizen, I know that the tax dollars must be spent responsibly. Fraud, waste, and abuse within the system simply cannot be tolerated. Having said this, I know you've heard from Mary and you've heard from Bob as to how we plan to do this. It's my hope that this legislation will increase accountability by placing responsibility for the internal audit function in this one state agency instead of allowing each agency to conduct their own. Too many issues can fall through the cracks when each state department performs their own internal audits. Having this cohesive, single agency, not only to conduct the internal audits for all state agencies, but also to be responsible for reporting their findings and recommendations to the newly created Internal Audit Committee will provide an additional and much-needed review process.
The bill requires that an internal auditor perform an audit. The bill requires that an internal auditor write a report on the findings. Then the bill provides that the agency administration would have a 30-day period for which to respond with a correction plan. All of that information after the investigation stage is available and would be available to the public. It allows the internal auditors to do their job in the hopes to obtaining the most amount of information when they're out doing an investigation and asking questions and looking at those checks and balances and those controls that exist or don't exist in an agency. Once the report is issued, and it is required to be issued, there would be no circumstance or instance where this information would not be available to the public. The bill requires a report to actually be issued. That information would then be available to anybody that would want to look at it. We have communicated directly with the OBM director and intend to work with her as this bill has testimony in the House and Senate, and we've also contacted the governor and intend to work with him. We think that this is an important step towards improving accountability, and we certainly hope to have their support, and we intend to work with them every step of the way. Internal auditors exist today in all of our state agencies, and they are currently operating in some function within that agency, and in some cases not really performing the role or the duties of an internal auditor. So we're not expecting to create a new budget or new spending. What we're looking to do is to take those internal auditors that already exist in our state government agencies and change how they do their work and who they report to through OBM and through this audit committee. We see this bill as a separate, independent, standalone step that we believe is necessary, even in light of all of those other discussions that the governor has presented in his budget. We believe this is something that should be done in addition to, or certainly if those measures don't make it into the final budget, we think that this particular measure is necessary in order, again, to improve accountability, to prevent situations where agencies are ignoring the concerns that are brought to them that create that environment where misspending of tax dollars or fraudulent spending of tax dollars can occur.